Hello to all Trading Link partners. We are here once again for our weekly trading sharing session. This week marks the first trading week of 2025. In last week's summary, we advised avoiding trades this week to avoid potential abnormal fluctuation. Looking at the market, this week indeed saw significant fluctuations. For instance, today marks the opening of the annual, quarterly, and monthly charts. Crude oil finally broke out of a 4-month consolidation range. It broke through the high point of the past 4 months. The current price is $74. The market may not have had much bullish news. However, from a candlestick perspective, such significant openings often result in abnormal fluctuations. Crude oil might face resistance near the $75 moving average on the weekly chart. Around $75.30, it might encounter resistance. The weekly chart pattern might resemble that of gold. For example, gold's daily chart, such as today's close, still has some distance to reach $75. Next Monday's opening might break today's high. It could face resistance around $75.30 and begin a downward correction. Although it's a new year, the crude oil market lacks any significant bullish news to stimulate it. It's merely a release of pent-up market pressure, not a true breakout. Therefore, short-term longs need to be cautious. Short-term trades should still favor long positions, but traders should avoid the risk of rapid plunges and trend reversals after next week. This highlights the substantial potential risks in crude oil at the moment. In such a strong bullish trend, do not establish short positions in crude oil. On the 4-hour chart, crude oil is floating, as traders say, maintaining strong momentum. It remains very strong. All the moving average systems are in alignment. This is a relatively rare instance of a strong bullish trend in crude oil. Once such a candlestick forms, it often sustains its momentum until the session closes. At 3 a.m., if the price breaks above $75.30 and clears the $75 round number level, establishing short positions would be a viable strategy. However, if resistance is encountered at $74.67, then the high point might occur in the pre-market session on Monday, around $75.30 to $75.90. A rapid pullback might follow. This represents a potential trading opportunity in crude oil. As for gold, yesterday, it experienced a very unusual fluctuation with a quick rebound at the annual closing line. But just before this rebound, the weekly chart suggested a potential rapid drop showing a bearish right-side pattern. At that time, we advised traders to stop opening short positions to prevent a quick reversal after the annual close. On Tuesday, as the last trading day, the price quickly rose after the market opened. Additionally, the US dollar index opened strongly yesterday, which can be described as a game-changing start. The annual chart formed a long bullish candle that day, reaching 109.54. In contrast, the euro has dropped significantly. In the context of a strong US dollar, gold also formed an opening line at the top, which may lead to a downward move. The pattern we are hoping for is that gold could form a OV that breaks below the 5-day moving average today and then form a few consecutive bearish days next week. This could be in preparation for the non-farm payroll data, ready for DHN to 540. This would be the ideal scenario. Therefore, opening short positions in gold can still be considered for positioning. This is the current movement of gold. I also want to make it clear to everyone why there was a strong rebound in the middle of this week. It was actually a reversal after the opening line. In fact, what happened was the opening line, then the top of the weekly chart, the top of the monthly chart, and the upper shadow of the quarterly chart. This may not have much to do with technicals themselves, but it is driven by the future market dynamics and the continuity of the candlestick pattern. Market makers chose to move in this way. Now, in the short term, there is no problem with opening short positions. The probability of success is still quite high. For example, this 2-hour candlestick might break below 2,643, reaching the last support level on the 4-hour chart. The bulls trapped in this move might not have the chance to exit for many days. They may not have the opportunity to close their positions. This kind of risk is still quite significant. Of course, gold's current volatility isn't particularly strong because it's still in the process of a rightward and bullish movement. But once it closes below 2,640 today and closes below the 5-day moving average on the daily chart, the downward trend next week will still be worth looking forward to. Personally, I believe, and based on our team's analysis, we think that in the next few weeks and during the non-farm payroll trading week, the top of the wave has already formed at 2680. This is the movement of gold. Now, back to the non-USD currencies. We have always been bullish on the US dollar, continuing to be bullish on the dollar because this is due to the current US economy and the environment they are trying to create. the US dollar will continue to be strong while also rising. This helps to keep the US dollar within the US and supports the US stock market, at least avoiding a sharp decline in stocks. Avoiding too steep a drop. For now, there is still no visible ceiling. It's possible that this trend will continue for quite some time. On the weekly chart, after a few weeks the dollar may experience a brief correction around the 115 level. Non-USD currencies remain bearish overall. The dollar's medium-term bullish trend remains strong. As we've mentioned in recent weeks, it's merely undergoing a moving average-based pullback or adjustment. This reflects the market's structure and the choices made by major market players. This impact will likely be long-lasting. Building on the strong US dollar, we see that Bitcoin is still on an upward trajectory. Therefore, one must be cautious with short-term trades and avoid attempting to capture bearish pullbacks that might not materialize. Crude oil, for example, is a commodity we specialize in. We have already built positions below $70 for quite some time. Unfortunately, the margin requirements on certain platforms remain relatively high, but for our internal orders, the costs have consistently been low. Bitcoin is also undergoing a correction. However, we remain firmly optimistic about Bitcoin in the medium and long term. Its trajectory over the coming weeks is likely to benefit from US policy impacts and key figures or events. It could potentially break its previous high. This current correction is merely supported at the lower Bollinger Band. Additionally, a double bottom pattern has already formed. Once Bitcoin stabilizes above 98,000, it will likely break above the upper Bollinger Band in the coming days, reaching the psychological level of 100,000. This will solidify the overall trend. As we enter a new year, we hope all traders can set up their annual trading plans. Remain patient and manage your positions carefully. Even as the Lunar New Year approaches, don't let the festivities disrupt your overall annual trading rhythm. Trading should still be approached methodically. It requires the market's cooperation. Over the past 10 days or so, trading has been quite subdued. You can choose to take a break during such periods. These quiet market conditions may actually increase the likelihood of incurring losses. This is what we often refer to as small markets leading to big losses. This happens because traders repeatedly hit stop losses due to false breakouts. From yesterday's annual chart opening, the overall volatility has indeed increased. Gold's trading volume has surpassed the 10-day moving average. Crude oil, on the other hand, is clearly leading the way. It has reached a trading volume of over 280,000. This level of volume hasn't been seen in quite a while. Moreover, it has broken out above the upper boundary of its consolidation range. This explains why a rapid pullback is possible. After the range has been pierced and the upper boundary has been breached, there is significant resistance above. This could lead to a swift downward correction. This correction is likely to be quite intense. It represents a potential trading risk. Overall, this week our crude oil positioning has been executed brilliantly. Repeatedly building positions below $70 has allowed us to achieve an ideal setup. Alright, this concludes our overall strategy summary for the week. You have accompanied Trading Link for over half a year. During this time you have learned some simple trading techniques. You have also gained insights from the orders placed by our traders, learning how excellent traders manage their trading systems and refine various details. Trading is a challenging journey. Over the past 6 months, we sincerely hope that the traders who performed well can continue their outstanding performance in 2025, maintaining their trading models and habits. For those who haven't done well, don't lose heart. Take this opportunity to reassess yourself and re-enter the market with renewed vigor. There will still be plenty of trading opportunities. We believe this year's overall volatility will offer abundant opportunities, especially in the first half. For instance, crude oil in the fourth quarter was largely in a suppressed state. We believe this volatility will soon return. This will present opportunities for all traders. The same applies to gold. Gold's volatility is gradually expanding as well. The same goes for non-USD currencies. These are all potential opportunities for the future. So, don't dwell on temporary losses, nor should you be overly concerned about minor gains or losses. Make sure to manage your positions carefully. Preserve your capital effectively. This was also something we discussed a few days ago during the year-end review meeting with all the Trading Link traders. We shared some key insights. Alright, this concludes this week's analysis. Thank you all for listening. See you next week.